Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Now let's take a look at the coal market. So actually the performance that we have considered yesterday is actually started at least at some way. So we're not seeing some explosive action on lower time frames, but still 2 points that we have discussed, we've got them. So first is the bullish grabber has been formed on the daily chart, and today, depending where the market will close, we could get another one. So it will be somewhere near the top around 1927. 928, we could get another one and see what will happen, because potentially this grabber actually has a very extended target. It suggests taking out of this top. It's around 1950. As we said previously, obviously there should be some background for that. Hardly it will happen occasionally, especially in the current situation. So probably some news should be released, or somebody should tell something to trigger this upward action. But this is really serious thing. Yes, maybe the chances look not really very great. It's just because previous downside momentum looks rather solid. We have almost take closing within the previous 2-3 sessions, and market will have to struggle against this momentum. But market grabber stands in place, and until it will not be cancelled, it is a bit well, not very comfortable to consider new short position. So we need to see what will happen. Appearing of this grabber, it provides few options if you would like to trade it on the long side. As usual, you have to make the choice between risk and reward. If you take position right now, you will get better entry point, but you will have to carry more significant risk. Or if you wait for further confirmation, you will get less risk, but probably entry point will be worse. So that's actually what we have. Additional target, the additional problem that we are getting is just keeping position through the weekend, which is also in the current days it's really tricky. So, but in general, if we take a look at the full time frame chart, that's what we have. Here's some kind of, well, not the brand button, neither the double repo, nor the brand button have been formed. So for me, this is more like a double repo lookalike. Because with these performances, you will see on lower time frame, this will be a chance of the market to push price lower to the lows, and this attempt has failed. And although we haven't get the second close below the 3x3, this performance mostly reminds me some kind of the double repo action rather than bread bar. So currently market hits 1927 for the bread bar. It's lots of closing above the 3x3, not just 3 of them as usually should happen. But anyway, the performance that we were considering now is underway. So we see the pullback down from the 1927 resistance. And for those of you who would like to trade grabber on the daily chart, take position, that's the chance to consider. So you need to keep an eye on some support areas, placing stops below the grabber, and just see what will happen. If grabber fail, well, it means that bullish stop is cancelled. If it will work, that's great. You will get just perfect entry opportunity. So on the lower time frame on the hourly chart, take a look what we have. In fact, we have the ABCD pullback here in the Gartner's triple to sell. It suggests at least 30% retracement, 1922. But taking in consideration all this stuff, I'm not excluding the chance that this might be a bit deeper retracement somewhere to the 1920 and 618 level. It also might happen. Here is just minor acceleration we see to the upside. So that's actually a setup that we have. Once again, this is not for conservative traders. Because we do not have anything except this grabber. If market indeed intends to show this action back to the 1950, obviously it will start forming something here. It will start forming some background, the preparation for some significant upward action above the 1950. And the next week we should see something. This may be just part of some larger pattern, for example. That's the things to follow for conservative traders. If you're ready to take some more risk in exchange of better entry opportunity, well, you could consider this one. So trying to anticipate possible further performance, totally relying on the grabber and considering taking the long position somewhere around 1920 area, let's call it in this way, with the stops below the grabber. That's very simple, which is actually additional advantage in the current situation. And not very costly. It's just because very small risk, actually around $5 per contract, so it's not really very big potential risk. But the chances on success slightly lower, than because, or better to say, it's higher degree of uncertainty in the current situation. So that's what we have on the gold market. Let's see how situation will develop.